Welcome back to the Neuro Finance Masterclass. Today is day 67 of our 365 Days to Financial Freedom series, and our theme today is inflation and the theft of purchasing power. We've spent a lot of time analyzing markets, examining the power of the dollar, and looking at broader economic trends. But today we are shining a massive spotlight on the dollar's absolute greatest enemy. We're exposing a force that operates entirely in the shadows, literally waging a war on your life energy while you sleep. We are talking about inflation, but trust me, not the way you've ever heard it explained before. I want you to give me your intense, undivided focus for this explainer, because what we are covering today represents the exact dividing line between the amateur who always feels behind and the architect who builds lasting generational wealth. If you don't grasp the concepts we're laying out right now, well, pretty much every other financial move you make is fundamentally compromised. Here's our syllabus for today's explainer. 1. The invisible currency thief. 2. The leaky bucket trap. 3. Nominal versus real returns. 4. Defending your stored time. And finally, number 5, the architect's realization. Let's get right into it. Section 1. The invisible currency thief. Okay, let's dive into this by completely tearing down a pretty dangerous misunderstanding. We've all been trained to view the world through this really limiting lens. The amateur view is what you hear on the news every single night. You look at a carton of eggs and say, wow, prices are really going up. You kind of think the eggs themselves have become more valuable. But the reality is the exact opposite. Prices aren't going up. The value of your currency is going down. It simply takes more of your weakened dollars to buy that exact same carton of eggs. And that brings us to the true definition of inflation. It is a silent, invisible thief that enters your bank account every single second and steals a piece of the work you did 5 years ago. I really want that to sink in for a minute. This isn't just some abstract economic concept. It is an active, ongoing theft. Think about the labor, the sweat, the sheer stress you endured 5 years ago just to earn $1,000. Well, that $1,000 sitting in your account right now can no longer buy what it could back then. The invisible thief has literally reached back in time and stolen the physical effort you already put in. Moving on to Section 2, the leaky bucket trap. This brings us to a really visceral metaphor. I want you to imagine your savings as a physical bucket of water. Think about what it took to get that water, working 10 hours a day, missing family dinners, enduring those terrible, soul-crushing commutes. You finally fill up that bucket and you put it in a quote-unquote safe, traditional bank account. You lock the heavy vault door. But here's the fatal flaw. While the door is locked tight, there is a gaping hole right at the bottom of your bucket. And depending on the economic climate, that hole is draining your life energy rapidly. Every single year, 5%, 10%, or in periods of severe inflation, even 20% of your purchasing power just leaks out. You open the vault, you look inside, and sure, the physical bucket is still sitting right there. The nominal number on your bank statement hasn't dropped. But up to 20% of the water, the actual utility, the real purchasing power of that money, has completely vanished into thin air. It just buys less and less every single day. So the absolutely crucial point here is this stark reality. Keeping your hard-earned wealth in pure cash is not a safe strategy. It is a guaranteed mathematical loss. Sitting in pure cash might feel safe emotionally, but mathematically, you are actively choosing to bleed out slowly. Section 3. Nominal versus real returns. So sitting in cash is a mathematical loss. What happens when we try to outsmart the thief with basic interest rates? Let's compare two totally different mindsets here. The amateur logs into their account, sees a 10% interest rate, and celebrates. This is a nominal gain, meaning the raw number went up, but the architect knows that if inflation is running at 15%, they haven't gained any money at all. They have actually suffered a 5% loss of real purchasing power. The amateur pops champagne while getting poorer. The architect only cares about real adjusted returns. And this brilliantly illustrates how inflation acts exactly like a treadmill. Think about it. If you're running at 10 miles per hour, but the treadmill belt is moving in the opposite direction at 15 miles per hour, you are moving backward. You're sweating, you're running as hard as you can, but you are losing ground. A 10% interest gain is entirely wiped out by a 15% inflation rate, leaving you with that painful negative 5% real return. Let this thought hit you with full force. If your investment doesn't beat the rate at which the government prints money, you are working for free. As the currency supply expands, your slice of the pie gets smaller and smaller. If your investments aren't outpacing that expansion, you are literally subsidizing the system with your free, unpaid labor. And nobody wants to do that, right? Section 4. Defending your stored time. We've clearly established the threat, so now we must understand what is actually being attacked. Money is not just paper, and it's not just digital numbers on a screen. Follow this logic with me. Step 1, you trade irreplaceable hours of your finite life for a paycheck. Step 2, therefore, money is simply a mechanism that stores your human time. It's basically a battery holding your past effort. Step 3, when inflation eats away at your savings, it is quite literally deleting that stored life energy. It is erasing the actual hours you spent away from your family.
And this, right here, is exactly why we study markets in this explainer series. This is why we analyze the stock market, why we look into crypto, why we study real estate. The amateur thinks investing is just about greed, right? They think it's about trying to get rich quick. But the architect knows the real truth. We don't invest out of greed. We invest as a mandatory act of self-defense. We absolutely have to armor up against this invisible thief.
We acquire productive assets because they act as an impenetrable shield for your time. Think about it. A piece of prime real estate or a strong cash-flowing business. When the government prints more money and the currency devalues, what happens to the price of that real estate or that business? It goes up in nominal terms. It absorbs the inflation. By moving your stored life energy into productive assets, you raise your shields. You successfully protect your time. Which brings us to our final section, Section 5, the architect's realization. This is where we transition from simply understanding the problem to taking decisive, calculated action. Do not let the reality of this invisible theft cause you despair. No, instead let it fuel your neurofitness. Let it motivate you to aggressively educate yourself. Because the absolute safest thing you can do for your future is learn how to confidently move your wealth out of that leaky cash bucket and securely place it into productive assets that the thief simply cannot reach. I want you to internalize this and let it become your guiding operating principle. Stop working for money that dies. Start building an empire that grows. Cash is a dying asset, folks. As long as you are merely accumulating currency, you're just building a castle on shifting sand. An architect, on the other hand, builds an empire of robust, productive assets that completely outpace the printing press. I'm going to leave you with a cognitive task for today's explainer. I want you to go look at your emergency fund or wherever you keep your cash savings. Look at the balance. Now, considering the inflation rates we've seen over the last 24 months, I want you to calculate exactly how much real purchasing power you have permanently lost. How much of your life energy just leaked out of the bucket? Calculate that number, face it head on, and let it be the catalyst that turns you into an architect. Thank you so much for joining me in this masterclass, and I will see you in the next explainer.